Hi, this is Todd Croy with the Vallejo Croy team. And I wanted to I was asked actually to put this video together to show people how to buy houses with little or no money down. And so I wanted to talk about that and talk about really what's involved with little or no money down. Now, the first option that has no income limits whatsoever would be to get gift funds from a family member or your grandparents or as a gift. And in order to buy a house with really very little money out of pocket, you're going to need 5% plus closing costs, which is around $5,300 for this $200,000 house. And 5% would be $10,000. So you're looking around $15,500 total. All right. So that's some people, that's a gift option. Other of us that grew up without rich people to give us money, this is an option for you. All right, so there's two ways to do it. I've actually put together a way to do it in South Carolina, but most of these are for North Carolina. And I really wanted to discuss real quickly the differences between doing a USDA loan and North Carolina housing loan, and then also talk about what the different requirements are for income. So if you look at these two income limits that I put on this little example, you'll see that USDA has a family household limit for income. Meaning if there's a couple buying a house, the couple's income cannot exceed the $78,000. This is for 1 through 4. So if it's a couple with 2 kids, same thing, $78,800. Now if you have 3 children, it really jumps up, you can see. Or if you have another family member living with you that's a dependent, that's the key, they have to be on your tax returns. Now, the other option is North Carolina housing, and what's cool about it is unlike USDA, that $85,000 limit is not household, it is per borrower. So if you had a household of 3 income earners and one person made more, so the combined income of the housing exceeded $78,800, but one person that could qualify for the loan makes $85,000 or less, you can do North Carolina housing. All right, so they're both great options. One's for buying in North Carolina, the other's for USDA, and I like it for Lancaster County particularly. But I will say this, USDA loans, make sure you always work with a realtor and finding your house. And you're going to find, when you listen to me, you're also going to go, there's another reason to do it. But they can make sure the house you're going to buy, if you decide to go USDA, is in a USDA area. So let's get down to numbers. All right, so if I'm buying a house for $200,000, and I go with the North Carolina Fannie Mae option with 3% down payment assistance, and 3% is of the loan amount, by the way, I would be looking at a loan amount with 3% down payment. So a 97% loan is $194,000 of $200,000. At that rate on 8/22/2015 was 4%. My principal and interest payment would be $926.19. My mortgage insurance, which would drop off in this case after about 12 years, is $97. And then my escrows and HOA would be this. And I've actually estimated the insurance and taxes. Taxes are based on Mecklenburg County. So if we went down to Lancaster County, believe it or not, that would drop to about a third of that, certainly a half of it in any way. So something to keep in mind if you really are tight on a budget. And then $30 for HOA dues. So our total payment's $1,324.85. Now, if we didn't have down payment assistance, we would need $13,312. In this case, I've actually put in a deal here where we're going to get seller-paid closing costs. Work with your real estate agent. Your real estate agent can help you get seller-paid closing costs. And if we look at it, I can get up to 3% of this purchase price, and I can apply it on any of these. Now, there's a limit, right? If I only need $4,600, I can't get $6,000 and get money back. I can only cover this amount of money. All right, that's it. So keep that in mind as you're negotiating. If I only need $5,371 to close, I don't want $6,000 in seller pays. I want $5,300 in seller pays, just to be cautious, okay? So each one of these options would be available to you over here with no money out of pocket. And this one you would need about $1,500, all right? So if we look at each one, let's talk about it. This one has monthly mortgage insurance is $1,324.85. This is the most expensive. It's FHA, and the reason being is FHA monthly mortgage insurance is very expensive. But here's what's cool is if you've had some credit challenges and your score is lower, you might be able to do this particular option. All right, still a way to get into the house with less money out of pocket. In this case, 0. In this, as long as we get some seller paid closing costs. USDA, this would be for South Carolina if the house is in a USDA qualified area. And how do I know? I can go to the USDA website and look it up. But more importantly, I can work with my real estate agent and make sure the house or condo I'm going to buy is USDA qualified. But if it is, and I will tell you most of Lancaster County, if not all of it, does qualify for USDA purchase. And as long as your income is less than $78,000 as an individual or a family of 2, well, then you're good to go. $78,800, that is. You can buy, all right? And again, small amount of money out of pocket. I can get up to $6,000 in closing costs, wiping that out. It's a great way to go. And then finally, in North Carolina, and this would be like Mount Holly over in that area, that's USDA eligible. You can get in also for very little out of pocket. So look at each one of these. It's a way to get in with very little money out of pocket. Right here, if we look across the bottom here, even if I take out the closing costs paid for by the seller, $7,400, $4,600, $53, and $1,371. And I really think as long as you go in, and you got to remember, housing is in tight supply right now. If you work with your realtor to put in a good offer that really factors in the seller paid closing costs, it really can help you out your cash flow and make sure that you've got your cash to do things you need to do with as you move into your new house. All right, listen, we're always here for you. If you have any questions, please let us know. We like to design mortgage solutions for our clients and make sure we get you into the house the right way. Good luck on your house hunt. We'll talk to you later.